Good morning, everyone. I'm Catherine Ross with TheStreet. I'm here on the floor of the NYSE with Jim Cramer. Jim, how are you this morning?
Well, you know what? I'm good because the Fed chief, I became more data dependent and realized that there's cracks. Now, there's a lot of misinterpretation. There is no, it's very interesting. Okay, so let's say someone throws on fourth down, all right, rather than run, okay? And it's about they need a half a yard. Well, we might say, well, that's it, and the guy drops it. Well, that was ill-advised. That was a bad thing. Well, I mean, it's the same thing with the Fed. In other words, it's not subject to interpretation. Guy drops the ball, it's bad, and would have been better to run. Powell had a passing game, and he switched to run game because it's too risky to do a passing game. And I always find that sports, particularly the NFL, is far more rigorous than the way we judge the Fed chief. Fed chief is looking at the field and he's saying, listen, they've got the defense is a little more strong, has a little more headwind to it. And so what we're going to do is we're going to adapt. And that's what you want from a Fed chief. He adapted to some weaker numbers, jobless claims going up again, the worst in six months. He reacting to the fact that housing did not bottom, continues to spiral down. Yesterday were terrible numbers. When I say terrible, I mean really terrible. Back to 2016, a really big drop off in sales and housing prices going down. My wife, who's in real estate, taught me that when you have that combo of ballooning supply and prices start going down, you tend to be in a vicious cycle down, because then buyers, the buyers drop, sellers chase the buyers, prices go down, your loan to value may have been a little bit too shady. If you noticed, which I think very few people did, Powell started talking about non-bank lending, and no one even focused on that. Well, I just immediately went to work on it, and non-bank lending is about 50% of all mortgages. You can get that from Tim Sloan at Wells Fargo. They use different standards. There's 1.6 trillion in mortgages. So therefore they did 800 billion. 800 billion is being lent with standards that are well below what JP Morgan, Wells Fargo would do. And that's what I think the Fed chief is worried about. Housing going down in value, therefore could trigger some possibilities of some real stress in the system. Not as bad as 2006-07, but bad. Autos, GM just lays people off. You don't do that when things are good. And then oil crashed. Oil went from, in a 2-month period, it crashed. It was in the high 70s. People thought it was going to 100. It touched 49 last night. Now, the hottest area of the country was Texas. But more importantly, oil is a very capital-intensive business. You order a lot of equipment but now you're going to pull back. You're going to see rigs drop. That had been the greatest growth industry in our country, which was the ramp from 9 to 12 million barrels a day. And that's going to halt. That's not going to, I shouldn't say halt, but it's going to start going down. You're going to start to see rig counts going down. I'm presenting this whole pastiche, which I'm also talking about the deal economy speech, only because it's really important to note that Powell is reacting to circumstances. And that's what we want. He's got horse sense. And before, when he was talking, an innocent mistake, just presumed that everything's going to be strong, and said, you have to learn some Fed speak. And Fed speak is, you're like, he went to Janet Yellen. Because I don't know whether he talked to her, but Janet Yellen's Fed was about not being so determinist without thinking about the facts. It's much more fluid. And I think that Jay learned that it's much more fluid. I know Jay, and he's a great guy. And I'm really glad. I didn't like being a scold to Jay. He's a really great guy. Really great.
Do you think that the market overreacted to the Fed's speech?
No, it was right. I think the problem is, as I've been saying, is there's two bear claws. The bear claw of the Fed and the bear claw of the president in Argentina. And the president's a wild card. I mean, maybe she comes in with something. I don't know anyone who thinks that. I know that Peter Navarro, whom I've known for many, many years, has said that, look, hardliner, and I think that the president says, look, we're going to let the 200 billion tariffs go to 10 to 25%. I have Dollar Tree on tonight. I want to talk about that with them. Dollar Tree's up nicely because they're really starting to get Family Dollar together, and that's good because it's a great company. So, I mean, what we have is the second bear claw is still up in the air, and it can hurt the bull. But because the first bear claw is now more data dependent, I'm more confident. There are some people who say, well, Jim, you said if they do this, you'll wish you'll sold. Well, I mean, honestly, we bought last week for action alerts because we realized that the economy is so weak, there was no way that the Fed could stay the way it did. It changed. Had the Fed not changed, then that would have been a mistake to buy. When we talk about this in action alerts a lot, those money managers never are loath to admit that they ever made a mistake. Had the Fed not changed, everything we bought last week would have gone against us. Instead, everything we bought this week went for us. And we play with an open hand. Today we're taking some losses. We do that because we don't want to fund our losers with winners. So we play with an open hand, and the open hand said buy last week, and the Fed did the thing we wanted, but now we're concerned, taking some stuff off, because we think the president is too much of a wild card. And so you don't have as much stock on your sheets when the president's such a wild card.
Deutsche Bank is stock of the day.
Yeah,
and
that's good stuff we're doing.
Yeah, so you can find all of that on Real Money. But Jim, can you explain to me why Deutsche Bank is stock of the day?
Well, I went over with Martin when we do each morning between 4 and 5, and I think that Deutsche Bank, huge bank, keeps the EU on an accommodative status. And Deutsche Bank is one of those things that has caused chain reaction here, even though it shouldn't. JP Morgan tends to trade down, Citi tends to trade down. Deutsche Bank is probably the biggest concern, maybe the Washington Mutual of Europe, or Wachovia of Europe. And its weakness is something that if you do not focus on, you're going to end up doing the wrong thing, because it just seems to continue to get worse and worse and worse. The analog to it in our country is they have Deutsche Bank. We have McDonald's. I've been talking endlessly about how McDonald's is the stock of the moment for us. It's just going to go right to 200. Steady, consistent, better, versus not steady, inconsistent, worse, Deutsche Bank. By the way, there was a time when Deutsche Bank was so good, and I almost went to work for Deutsche Bank. I almost went to work for Bankers Trust, and Deutsche Bank was the most cautious and the best, and they really did lose it, and it's disgraceful. It's disgraceful what they've done, and they were very ill-informed about the way the United States worked, and I don't want the Germans to have to take a stake in Deutsche Bank, but it does feel like Northern Rock. It does feel like Royal Bank of Scotland. And they've got to get that situation in hand, and they haven't. And that whole situation is renegade. It's rogue. Deutsche Bank's going rogue. And that's why it's such a good stock of the day. We try to figure out every morning what's the focus. We go back and forth, and I was debating Amazon Web Services stock of the day for Real Money because Jhonsa had such a fabulous piece about the Amazon Web Services, but we'd already put that one out. So then I was thinking, okay, do we go back to say Tech Data? But then people haven't really heard of Tech Data, which is a company that's the biggest supermarket of tech stuff, and it's very strong. But Martin said, listen, it's Deutsche Bank. I totally agreed. We spent a lot of time. I'm trying to get you involved in my real life here on the show, and very, I would say, very cinema verite. And I'm taking great pride in the turn at Real Money. And it's just going to get better and better.
Oh, I believe that.
Yeah.
So Yeti had their earnings this morning.
Yeah, the stock ran, and I thought the numbers were good, but I guess there's profit taking, but the numbers were good. They were good, Catherine.
And you just recently had the Yeti CEO on your show. I'm interviewing him later on.
Yeti's fabulous.
Yeah, right?
I like the products very much, and sometimes, by the way, I like Newell products very much, and I think that Mike Polka's doing a turn there, and might be good to ask him about Rubbermaid versus Yeti.
Okay, that sounds great.
It's really a duke out, and I bought some Rubbermaid stuff when I was in a really terrific Walmart in Louisiana, and I've always liked their stuff, but I do prefer Yeti, but Yeti's heavier and more expensive. So that'd be great questions to ask him. I really like to know. When I get something like a Yeti, I see a company come public with stuff I like, Canada Goose. I get very excited. Canada Goose is one we did very well on. Most IPOs we don't know because they're either Chinese, and unfortunately, preponderance are very bad, or they're tech companies that I think are too dangerous.
And I just want to let everyone know that you're going to be interviewing Canopy Growth CEO
at really good. Bruce
the Deal
Linton
Conference.
Is the man. I am a huge believer that in a fork in the road here. The legalization in Canada is really important, but the companies that took advantage of it, for the most part, are not big board listed companies. But Canopy is, and that does matter to me. Canopy's well capitalized. So Bruce, who of course, big stake with Constellation Brands, is game, set, match. He's won already. And when I see Altria buying a stake in Juul, which I really question, I mean, Juul being a gateway to something that causes cancer, okay? But there's a reluctance by a Coke and Pepsi to buy into CBD. to cannabis, which also THC too is included. It is really kind of weird, isn't it? You've got Juul, which Altria is not a problem, cancer causing, and then we have marijuana, not a real problem. And that dichotomy I'm going to discuss at the deal economy.
All right, and to wrap this up, I've got an Ask Cramer for you.
Sure.
Don is wondering about Zuora, ZUO is their ticker.
Zuora's Tien Tzuo is remarkable, and we've got a remarkable person at our place, Margaret. I don't know if you know Margaret.
I do.
Margaret's fabulous, and she's handling all of our great subscription work, and she swears by Zuora, and if she swears by Zuora, I swear by Zuora.
All right, so Don, you've got your answer. All right, Jim, thank you so much for your insight. Thanks
Absolutely.
for joining
Thank you.
us. All right, I'm Catherine Ross with TheStreet. I'll see you guys tomorrow.